Buy a house next year if you want to be broke. In 2025, there's no way I would buy a house.
Hi guys, welcome to my channel. My name is Alex, and today we're going to be talking about the insane mortgage. Payments, is this a house or a trap? I think it's going to be pretty easy topic. I thought about that, but still, I think I'm thinking is not. So buying a house used to be the dream. Now it's a financial horror movie. Interest rates are wild, and monthly payments feel like you renting from the devil. You finally get approved, and boom, $3,800 a month for a two-bed fixed upper. Congrats, you're official house poor. You own the home but cannot afford furniture, food, or feelings. The bank owns your soul until 2059. That's terrible, guys. What's going on in the market right now, You used to window shop Zillow for fun. Now it costs chest pain. Remember when 3% mortgage rates were real? That was the golden age. We were young, naive, and employed. Now it's 7.5 with a side of regret. And do not forget taxes, insurances, HOA fees that feel like a second mortgage. Definitely. You budgeted $2,000 a month, reality laughed and gave you $4,000. It's terrible what is going on, guys, right now, and it's all the reality that we live in. So let's dive into the videos and watch, guys.
Big news in real estate today. The Federal Reserve just delivered another gut punch to hopeful home buyers. They're keeping interest rates frozen at the painful 4.25 to 4.50% range. That's 5 straight meetings with no relief in sight. And here's what the reality means for you. Those 30-year mortgage rates, they're stuck hovering around 6.8%. Think about it. Millions of homeowners, they're just not giving up those sweet 2 to 3% rents they locked in during the pandemic. Meanwhile, move-up buyers who want larger homes are sitting on the sidelines waiting for rates to drop. It's like playing musical chairs, but nobody is moving. But wait, it gets worse. The National Association of Realtors just dropped some sobering numbers. Pending home sales fell another 0.8% in June. That's the second month in a row of declines, and we're now sitting 2.8% below where we were last year. Here's the kicker. Fewer signed contracts today means we're looking at significantly weaker closed sales come August, even though there are actually more homes on the market. And if you needed more proof that this market is freezing up in a lot of parts of the United States, mortgage applications just hit a 2-month low. The Mortgage Bankers Association is reporting a 10% drop in total applications from just the previous week. With that 30-year fixed rate sitting at 6.77%, refinances have practically disappeared, and potential sellers are choosing to stay put rather than trade their low-rate loans for these sky-high borrowing costs.
Yeah, completely agree, guys. Rough times. We live in the rough times. Let's dive into another video and watch, guys.
Hey, good morning. It's Rick Vega with the Rick Vega Mortgage Team, powered by Hoot Home Loans, and it is Thursday, July 31st, the last day of the month, and it's time for your mortgage market update. So the 30-year fixed rate still sitting about 6.83%. I'm starting to sound like a broken record, but that's just the way it is. I don't see rates moving anytime soon, and probably not until second quarter or so of next year. Pending home sales dropped again. And foreign investors are now starting to buy up real estate here, especially in Florida, the higher end real estate. Condos here in Florida are especially soft, and actually in other parts of the country as well. Prices are decreasing on those, which might make it a more affordable option for buyers. And like I said, rates aren't going anywhere anytime soon. The Fed met yesterday, and Powell did not cut interest rates like we did not anticipate he would. And he didn't raise them either. He kept them stable, and that's where I think they're going to stay. He meets again in September, and I don't think he's going to make any changes to the rates unless something dramatic happens. So the bottom line is interest rates are stable. Buyer conditions are favorable.
Yeah, you see, the interest rates for the mortgages is still high. So, and not gonna go down in the near future, as I understand. But still, we're hoping, guys. Let's move to another video and watch, guys.
Here's the details of the 2025 first-time homebuyer grant that just came out. So here's what's included. Now these funds are limited and this program won't last forever, but they'll give you 3.5% to cover your down payment. And this is a forgivable grant from day one, so that means no payback is required. So here's the qualification. You must not have owned a home in the last 3 years. The minimum credit score is 620, and this must be your primary residence. So here's a pro tip for long-term savings. So if you use this grant to buy a home with the minimum upfront costs, then refinance once rates drop to lower your monthly payment even more. And since this grant is forgivable, you don't have to worry about any repayment.
Yeah, it's pretty interesting, it's a pretty good grant. I hope somebody can use it. So it's gonna be pretty good to have such a thing like this, Yeah, it's definitely a pretty good idea. Just like it's 3.5 to cover your down payment. It's great. Like for example, for 450K house, it's only like the grant will cover like $15,750. That's pretty awesome. I hope someone can use it. Okay, let's watch next video. I'm giving more market updates, so in this video, interest rates, because I think it's matter for insane mortgages that we have right now.
37% of homes are failing to sell. The last time we saw that was in 2011. The listing success rate has dropped significantly since March, when it was at 74%. It's now at 63%. However, active listing inventory isn't climbing, and under contract and pending sales are doing better. What gives? Let's get into it and take a closer look at the greater Phoenix real estate market. The average 30-year fixed conventional mortgage rate is 6.75%. There's 24,190 homes for sale. There's 7,552 that are under contract and sale pending. There are 19,547 homes that have sold over the past 90 days. There's 111.37 days of inventory. Average days on market is 74. List to sales price ratio is 97.31%. Average sales price is $592,077. The monthly median sales price is $444,000. The monthly median sales price is up 0.2% from last year. The monthly median sales price of $444,000 is down 1.33% from last month's $450,000. Our current annual median sales price is $453,500. Last year it was $450,000, and it's up 0.77% from last year. Let's go deeper. So the number of homes that can't sell is rising, but we aren't gaining inventory. Why? Close to 40% of homeowners own their homes outright and have no mortgage to pay. That's in the US. However, Phoenix metro area is close to that. 65% of homeowners have at least 50% equity in their homes right now. And most of those homeowners are sitting on very low mortgage interest rates. People just don't need to sell right now or don't have the desire to do so. And if they do decide to sell and aren't getting the results they're looking for, well, they can just take their home off the market. Homeowners have the leverage to not sell. This is why we're seeing supply in the form of active listings go down, not up. However, the monthly median sales price is dropping, but not that drastically, because demand, albeit anemic, is still there, and we're right in the midst of our yearly seasonal lull. Yes, but the annual median sales price has swung momentum downwards. It takes significant effort in the way of data to make that happen. It's just been sitting there at $455,000 since April. However, over the past 2 weeks, it has dropped to $453,500. Not a lot, but it's been hanging out there at $455 for quite some time. Bottom line in Phoenix, if you don't have to sell right now, don't. If you do want to sell, you might take a hit on that end, but when you go to buy, you'll recapture that. Or if you're looking to cash out that equity and do something different, like move elsewhere, you'll have the coin to do so. If the time and circumstances are right for you to buy right now, you're in a great window of opportunity to do so. We've been in the midst of this window and the data is just catching up with it. The listing success rate is at its lowest since 2011 and looks to still be dropping. The number of closings over list price is at 13.7%. Anything below 18% is a cold market for sellers. The monthly median sales price has dropped $15,000 since March, and the annual median sales price has gone downwards. So as a buyer, you have leverage that you haven't had in over a decade. But I know mortgage interest rates are high, and not that high, but they're higher than what we would like.
Yeah, you see, trying to get more numbers for you guys from different parts of the country. You know, I think it's going to be useful for you, especially if you're in the Phoenix metro area, somewhere there. And you know, why not? Why not, guys? You know, so thank you very much for your likes, subscriptions, and for your comments. I do appreciate this, guys. You know, I'm trying to grow the channel, and I'm very gladful for all your shares, likes, and subscriptions. It's really important for my channel to grow once again. So let's watch the next video, how the president talking about all this mortgages and all this stuff, you know.
Developer, very successful developer. How does a family afford to live in a one-bedroom apartment?
No, it looks like Adam Schiff really did a bad thing. They have him. Now, let's see what happens. It's not up to me. It's not up to, I stay out of it purposely. But it's mortgage loan fraud. It's a big deal. He defrauded banks and insurance companies and the federal government. But it's very simple. It's mortgage loan fraud. And you're right. It's a lot of people to live in a one-bedroom apartment, right? But he put it down. But he has a lot of other things far worse than that. So, no, Adam Schiff, they have him 100% on mortgage fraud. Now, if there's anybody else in this room except you would have no problem. But anybody else in this room, you'd have a problem. I'd have a problem. Yeah, please.
Let me know what do you think about that in the comments below. You know, guys, I just want to share some thought with you. So, you know, just imagine you want to the backyard now. You're moving the lawn while crying to your iced coffee about all these mortgage rates. Fixing the AC, that's be your vacation money for the next 3 years when you buy in the house, you know. Millennials finally bought homes, and Gen Z said, nah, I'm good. Some people escaped college to avoid student debt only to get mortgages into oblivion. Imagine that, guys. This is what happened right now in the country. At this point, a 30-year loan just feel like a lifelong commitment to stress and adjustable rate that just a Russia roulette for a budget. You know, you cannot even sell without losing money, but hey, at least you have granted counters, you know, so interest is eating your payment alive. You're basically renting from the bank. You know, I think that the main winner here is definitely the banks, guys, for sure. You pay all the money just to find out your neighbor plays drums at 2 a.m. You dreamed of a forever home, now you dream of going back to renting. It's not home ownership, it's financial gymnastics. Mortgage are no longer milestones, they are warning signs, and somehow we still call it the American dream. American dream, guys. Yeah, I just think how it's even possible, you know. And you know, I already have a lot of friends, you know, that still renting, not just buying the house, because it's cheaper just to rent, not to buy a house. This is the reality. Okay, guys, let's jump in a new video and watch, guys.
the 2025 real estate market is a wild card, and that's the only way I know how to describe it. You never know what you're going to get. You could get an appraisal that's very high and everyone's happy, or you could get an appraisal that's $50,000 low that you think is going to be high. Interest rates are and sellers still think that it's 2021 and that everybody's going to overpay for their house, and buyers are coming in giving low offers, which as you should. And sometimes it does work out, but sometimes you just got to wait for that house that sits 100 days, and then the sellers will listen to you. It's tough out here. But I'm going into a listing appointment, so let's see how this one goes.
Okay, what do you think about that, guys? Let me know in the comments below. Yeah, it's interesting thoughts. The market's definitely changed, but not like dramatically. I want to change it dramatically.
Are you thinking about buying a home this year? I've got some good news for you and some not so good news. So you've probably noticed that mortgages are still really high, even though the Fed has been cutting interest rates. So I'm going to break down what's going on, and I'm going to give you an expectation of where mortgage rates are going to be in 2025. So first, mortgages track the 10-year treasury, not the Fed rate. So mortgage lenders use bonds to help them set their long-term borrowing costs. And right now it's high because they're still concerned with lingering inflation and a strong economy. And I know, a strong economy is a good thing unless you're concerned about inflation. Also, many are expecting more spending with the Trump administration, so investors want higher returns to cover the risk. And then the last one, of course, is tariffs. Now, I personally think he's using them as a leverage tool, but if he doesn't and actually implements them in the traditional sense, that would be inflationary as well. And all this unknown means risk. And whenever there's risk, investors want a risk premium, which means higher returns. So here's what the big lenders are forecasting. Mortgage Bankers Association is expecting at the end of 2025 for rates to land between 6.4 and 6.6%. Fannie Mae has it at 6.4%, Wells Fargo at 6.3%, and Redfin is expecting at the end of 2025 for rates to land at 7%. So we average them all together. I think it's okay to expect rates to land somewhere between 6.5%.
What do you think, guys? What is the mortgage rate going to be till the end of this year? 6.5, higher, lower? Let me know in the comments below, guys. It's going to be very interesting to read about that. Let's check the mortgage rates and other stuff that happened in other countries, for example, United Kingdom. Why not? I decided to add this in my show to just show you what is going on there, guys, overseas. I think it's also going to be very interesting. If you like the rates from United Kingdom, Australia, or Canada, let me know. I will try also to add them in the show.
Mortgage rate updates. So we've got Leeds Building Society. They've increased quite a lot of the products, 2 and 5 years. We're going to see rate increases. Not the best of news. Coventry increasing all of the standard fixed rates and actually withdrawing some of the products that they've got. And then HSBC are just going against the grain and actually decreasing quite a lot of the products, which is a bit mad, especially on the 5 year anyway. Now, this is all stemmed from swap rates here. All you need to know is if these go up, typically mortgage rates go up, and they've gone up quite a bit since the beginning of December. So what we're seeing now is we're going to see quite a lot of lenders in January potentially take products off the market just so they kind of work out what's going on and then they can set new rates, or a lot of them are going to start increasing their mortgage rates. Swap rates have gone up because there's just a lot of chaos in the world at this moment in time. American market is a little bit mental, Chinese market's a little bit mental, UK market's a little bit mental, so we're seeing a reflection within the swap rates, because at this point last month, December 2024, 5 year 3.8, so it's gone up 0.2, 0.3%, which we're going to see a reflection with the mortgage rates. So I thought I'd come on, give everyone a little bit of an update on what's going on and what trends you might see, because you might see a lot of mortgage rates going up ever so slightly. Will they keep going up? I hope not. I don't think they will, but we just never know.
Guys, see, it's pretty interesting to find out what is the neighbor have, or other countries have, what kind of mortgage rates other countries have. So I hope you do enjoy that. Okay, guys, let's watch another video. Okay, let's jump into another video.
Have you seen the latest mortgage warning that's doing the rounds? If not, here it is behind me. So this year, 2025, there's going to be around 1.8 million of you that have a mortgage that's coming to the end of its deal and that will need it reviewed. A good chunk of those people are going to be in a 5-year fix from 2020. That's when rates were a good bit lower and you could actually get a 5-year fix for 2.2% roughly. Now the warning's coming because rates are now higher. For example, if that person was to take a 5-year fix today, and we're assuming that it's going to be on an 80% loan to value, the rate would be around 4.5%. So on a mortgage of £150,000, over a 25-year term, that's going to mean an increase of around about £180 per month. So yes, that is the warning. If your mortgage rate's coming to an end, make sure you get in touch. We can start reviewing mortgage options for you 6 months before your rate's due to end, and the earlier you act, the better.
Okie dokie, guys. I have several more videos for you to watch, so without further ado, let's watch another one.
This is by far the biggest mortgage hack, so if you have a mortgage payment, watch this now. So here's how you guys can actually pay off your mortgage faster. Pay off your mortgage faster by making extra annual payments. So one extra payment can knock off 5 years off your loan. 2 extra payments, 7 years, and all the way down. 5 extra payments can knock off 13 years. Yes, years of your loan, which could save you so much money just off interest, because we all know rates are kind of high right now. So if you guys are in a very, very expensive mortgage, I would highly recommend just throwing in a couple extra payments a year, and it'll save you guys so much time in the long run.
You see a pretty good life hack here too. You basically you can pay several mortgages extra, and 5 extra mortgages, and you just saving like 13 years. That's a pretty good one, That's pretty good calculation, and it's been in favor of you for sure. Favoring you as a buyer, as a borrower. Why not? That's a pretty good idea. What do you think about that, guys? Let me know. Let's jump into another video.
Today I'm going to give you a refresher on some of the deals that are available out there to help you finally buy a home in 2025. Remember, 580 score gets you in the door. With 580 score, you can get 3.5% down payment assistance. With a 620 score, you can get 5% down payment assistance, both FHA. Pro tip, if you have your realtor search for properties that have been on the market at least 45 days, then you can ask the seller to contribute to your closing costs. You may get to the table for a song and a dance. USDA, generally about 620 score. Got to live in a rural area, no money down payment. That's good for single family, condo, and townhome only. If you got about a 660 or better, you can go conventional, and that's only 3% down. FHA, you can get a 1, 2, 3, or 4 unit. Conventional, same thing, 1, 2, 3, or 4 unit. If you get a 3 or 4 unit FHA, remember 75% of the rents must cover the entire mortgage payment. But if you go conventional on a 2, 3, or 4 unit, it's only 5% down payment, and the rents do not have to cover the mortgage payment. If you're a veteran, you can get VA, no money down. You can buy a house and get it all fixed up before you moved in. FHA, only 3.5% down. You can buy a non-working farm for $0 down payment, or you can buy a working farm for 5% down payment, both USDA. Renting is jive in 2025. This is your sign to buy a home. If you don't want to buy a single family, get a multi-unit. And then maybe you can own a home of your own just like the cowboy. So what the heck are you waiting for? Do it.
Pretty good one, pretty good video. Pretty optimistic. So I hope you're loving it. Okay, I decided to drop one more video for you guys. So let's check it.
Buy a house next year if you want to be broke. In 2025, there's no way I would buy a house unless I got 2 things. If I could check these 2 things off, then I would consider buying a house. First, I would get the seller to either pay for all my closing costs or to pay for a permanent rate buy down. If you take a look at what these past couple years have been, and everyone's talking about doing temporary buy downs and we're going to wait for rates to come down. Yeah, how did that work out? If you want to get into the upper 4s, 5s permanently, where it becomes tolerable for you to buy a house and to afford a house, get the seller to pay for it. We're in a market right now where sellers don't really have as much leverage as they used to. They're probably more willing to do that for their buyer. And second, it has to have a garage. Houses with garages are average $50,000 more valuable. They get a $50,000 increase average market value. It's harder to find them, yes, but it's definitely worth it.
What do you think, guys? Is it really true? We already know the life hack that we need to search for the houses with the garages. That's a pretty good idea. So I hope you enjoyed this video, guys. I hope you loved it. Please like, share, subscribe. It's really important for me. And I will see you in the next episode, guys. Please be safe and bye for now.